It is time for me to bring the heat. That's right, I'm ready to bring the heat here on the weekend, guys. Another edition of Stock Market Mutterings. My name is Doug. This is Trade with Doug. And my promise and guarantee when it comes to the stock market mutter, you guys know what it is. It's to take a grope in the murkiness, try to make some sense out of the stock market for you. And before the week is over, my main goal is always to provide you with some direction, and hopefully the ideas and things we discuss here will put some money in your pocket. As always, before we start today with this one, I will make mention that there are 3 links down below. Actually, 4 this week. I've got a bonus link, but 3 links for those of you that are trying to take your trading to another level. For those of you trying to build the right trader foundation, take a look at the free DVD. It talks about the most important and valuable lessons I learned as 2 decades of a trader. Underneath of that, you'll see a link to the private community where you can trade alongside me each day. And for those that really want the very best in trader education, you can join the inner circle, which is lifetime access to the private community, plus access to the checkmark trading course and the inner circle course. So if that interests you, check it out. I also posted a link to the Technical Talk live stream YouTube event I had with Sylvia Bellrock. This is something that we're interested in doing every week, where we want to hear from you guys. We want to hear your questions about stocks that you want to talk about, provide analysis. We all kind of want to work together in this community and learn from each other and grow. So it's something that we want to do. Obviously, viewership matters there. We had a great turnout for the first one, but I put a link where you can watch what we're doing. We're also open to any sort of critiquing, any sort of ideas that you guys have. Again, it's a rough draft of a new idea. Really have high hopes for this. I'm really looking forward to sharing some great stories and some great knowledge with you guys. So kind of give me your input on that. Watch that video. Also posted up on my YouTube channel here a little bit later. But anyway, check that out. So here's what I want to talk about today. I mean, I don't know if the market is telling us it's going to correct here. We finally got a tiny bit of crackage in most of the indices here. And I don't know if we're going to build on this first thing on Monday, if we're going to see more panic, or this is sort of a short-term top. To say that it's overdone is an understatement. And to be honest with you guys, I mentioned this last week in the video. The market itself is the only thing that hasn't corrected. If you look at stocks themselves, the majority of stocks are in a bear market and have been bearish, in my opinion, for the last couple of months. Many of these stocks we talked about, I'll pull up some charts later, but a lot of these I did video on. You take all these old Momo stocks, especially the micros and the mid caps. You take the things like Fubo. You take the things like Vuzi, Pavem, the FUV, Blink, any of those Momo stocks, they've been cheesed. They've been absolutely cheesed and are still getting cheesed. Tiger, that's another one. I'm just like this DMTK. All of the heroes of yesteryear have been smoked. In fact, a lot of the stocks across the board, we've been every single day, in most cases, the majority of cases, I should say, that decliners have been outpacing advancers by 3 to 1. So what we're experiencing here for the last couple of months is every day you get up in the market, most of the stocks are actually red in the market, but the market itself is still holding up. There's only a handful of stocks that's responsible for this latest bull run over the last 2 months, in my opinion. And you look at things like Apple, Nvidia, Microsoft, those bigger tech names, and of course a couple of them slide in and out of there. You know, Facebook was hot and then it kind of pulled back a little bit and then it was Apple's turn. Those big tech stocks and a couple of those blue chippers are the ones that's really held this market. And we've reached these levels on historically low volume and on, I think I was reading the stats somewhere on the internet, but don't quote me on that because you never know if it's true or not. This is the first time, the other day was the first time the market had made a all-time high on the least amount of stocks going up in a single day since 1996. So it's definitely a different time in the market. So if you're somebody out there, you're experiencing what a lot of traders are experiencing. If you're holding a basket of stocks in a 401k or just a basket of stocks in a portfolio, most of them suck. Let's be honest. They're terrible. If you have some indice exposure, that may be helping you. But this is what we're seeing. Now, why does this matter? Because at some point we reach a balance again, and you're going to have 2 scenarios play out. Either the weight finally gets into the market and everything collapses. So this is one of the things we were talking about in the technical talk section is if this market corrects 15% here, does that kill those stocks even more? Do they see even more carnage? Or do they end up getting to levels where they become attractive? That's going to be one of the scenarios in my mind that plays out, as this will eventually weigh on the market. The second is that the market will go down while some of these stocks turn around and go higher. Only time will tell, but let's talk about some technical levels and some actionable ideas for the sake of time here. I would see that you get a few, there's two moves that you may be ready to expect here starting Monday. One will be a early morning press into the SPY down into the 427.32 area here, which was the recent breakout zone, somewhere in this neighborhood. So I think if you begin lower and you press early on in that area, that will tell us a lot of clues about where we're going to go for this week. And that will be, will that market hold its first level of support like it did just a couple of weeks ago before making a bounce? If that does turn up and you see a couple of successful days there, we may just be back to business as usual with this, and it starts another grind up to 450. I don't know. But I would really pay close attention to this because it's an important level that once was a breakout, that recently was tested as an area of support and made a double bottom on the daily. And if you get down here to the triple bottom and you happen to lose that, I would think the probability here is that we start testing either the lower area here about 415s, or most likely you're going to be somewhere down here into the 410s or even lower. One step at a time with this one, guys. You possibly could rotate all the way down to the 200-day moving average here. It's coinciding with an area of support. But first things first, I think 415 would come into play. So the thing is this, you either push down in here and hold and then jackknife back up in typical check mark fashion, or maybe you bounce quickly and you rotate a little bit lower. Nonetheless, I think there will be a defense at that level and a bounce, whether it's a very short-term bounce or something more sustainable. Only time will tell, but that's what I would see there. I'm sort of leaning a little bit more to something a little deeper in correction land. But we've gotten signs like this before. I mean, you could look back here and say this looked very bearish, but the market bounced right back. This looked bearish, like it was pulling back from all-time highs, but the market bounced again. So like, you can never underestimate the power of the bullishness in this market. Its ability to have more lives than a cat is unreal. It just keeps clicking away regardless of what the internals look like underneath of the surface. So pay close attention to that. You look at the NASDAQ. We'll pull up the QQQs here. It's got to be more overbought than all of these. I mean, this thing has been on like a 9-week winning streak until just this week here with the last couple of days. Same thing, I think you see 354s here, maybe a little bit deeper move into 342. So I'm kind of leaning to the sides towards a little bit of a pullback here in the market, something along the lines of 5, maybe even 10%, nothing any more dramatic than that, but who knows. But I think you see that here. But I will also admit, the market has been the magician here. You've had some opportunities just like his with some pullbacks in the Qs here as well, but the market keeps shaking it off. So we shall see as we move on. Now, some of these stocks, like I was talking about, if you're trading around the cheaper stocks, the mid caps, the micro caps, those lists like IWMs, I wouldn't long these right now with your money. And some of these were my favorites. I mean, you look at this Fubo here was something I really thought we had a shot to bounce. We got long this thing, was grinding up. But the tide just shifts. It just starts to fade. These things cannot put together consistent rallies that sustain themselves. And that's one of the signs of a shifting tempo in the market, is where these things begin to just fade. So again, if you're trading these individual names, you're getting a different blueprint here. You're seeing every day the market's making highs or gapping up, while your portfolio may in fact be going the other way. You've got to change on these quick. Vuzi was another one I mentioned at the top of this thing here. Look at this, laying on the 200-day moving average. Normally in this case, I would feel like, look, this looks like it's oversold. You got a very low RSI down here that's under 30 on the daily, which is oversold. You feel like a sequence of red days into the 200-day moving average is a no-brainer bouncer. But I'm not so sure in this market. I don't have that confidence right now to put any money on top of this one. Pavement was one here, same thing, 6, 7, 10 days in a row red. You've had things like Blink, FUV, the EV space. I mean, they all look like this. Tiger was another one. I'm just riffing off the top of my head. You guys probably have more that I've talked about here. Stay away from these. I would not buy the dip on these right now unless something dramatically changes Monday, Tuesday, or something like that. I wouldn't do it. Now, if you're a quick day trader and you're fast on your fingers there, maybe you can catch a quick bounce. There's other levels, there's other trades in there. But if most of you are swing trading or multi-day trading, momentum trading, position trading, I'd stay away from these right now. They're just not ready, because every single rally that you have in these things gets cheesed. And here's a good example. I know, because I shorted this tiger on that same premise the other day just for a quick day trade. This is exactly what happens, and you'll see this behavior across the board in all of these names outside of your big chippers and your big tech stocks. Is they get vertical in the morning. This is an opportunity for them to really rally and to really perform well, but they can't. And before the day is over, it's not that they've just given back a little bit of this rally or wasn't able to build on the rally. The real fact is they've given back 100% of the rally. Like Friday here was it ORPH? You get a little Momo here is the same thing. Big vertical move here, really big, huge rippage. But not only, again, not only does it just pull back, it gives it all back. It's a 100% giver. Like I said last week, it's like everything gives it up like a cheap prom date here. It just does not hold, and that's it. So I want to look at a couple of specific names as we move on here. Let me try to speed this up a little bit because I've just been yodeling. I'll put a couple of longs on here just because I'm looking, but I got to say that my enthusiasm level is at an all-time for it. I was watching this Etsy for a turnaround at the 200-day moving average. Again, same theory here. You had a little bit of an opportunity of a bounce here early on Friday. Same thing. It gave it all back. If it does not hold this level, I think my move may actually be to short this one. It's down a little bit more further than I want it to be, but I would consider shorting this one. I'd also start to take a look at some of this stuff that's been up a lot, like DEC. This thing is got super parabolic here, starting to curl a little bit. I think any weakness under 374. This one is a short. I did open up a short here for a swing on Lulu with the same theory that, I'm just feeling that all this stuff is going to get weighted down. You have a nice channel up. And normally, again, guys, I'm switching my entire stance here on what I normally would do. Whether it works, I don't know. Normally, what I would be buying that's been decreasing into lower moving averages or support, I'm now entertaining the idea of shorting that because they are not bouncing. And this is not just something I'm saying on one or two stocks. This is hundreds of stocks that I've seen this way. The flip side is stuff that I would normally be timid of shorting because they won't pull back, like your Nvidias or some of these other parabolics, maybe even putting Apple in that. They look like they're ready for some short-term correction. So I'm already in this one. But I'm looking for a deeper pullback to somewhere around 348. I think all of these will provide a very quick, abrupt pullback. ZM is another one here that I feel is shortable. It's not able to reclaim its 200-day moving average. And then PAC-B, here's another one that was a long that worked out really well, but eventually got stopped out for some profit. But I should have flipped this. But I still think it's the same thing. You're getting these things into big time levels of support and they're just not holding. So for me, I'm looking at this. I really want to be a little bit more short oriented, looking at things like DEC, Lulu, and ZM would be my top shorts. I think if you're a day trader and you see strong bounces, panic rallies in names like Tiger, FUV, Blink, I'm just running some off the top of my head, JMIA, this Skills, Wish, any of those Momo stocks, I think you should look for spots to short them. Now, certainly they can put 1 to 3 to 5 days worth of momentum together. We just recently saw that in some of them. But if they start to show signs of weaknesses where they can't build on those rallies and they start to push lower and lower and you're 1 hour, 2 hours into the session, you cannot reignite any Momo in those names, chances are they're just going to roll over like this Wish. These things are just not stopping. So if you are going to buy them, make sure that you respect your stops, to each their own. But I think we're going to be in the early parts of seeing a little bit of a pullback here in the market. But I know some people have been asking me, well, I'm waiting for a market pullback to invest. Hell, these stocks are already, they've been bearish for the last couple of months, in my opinion. So anyway, guys, I hope some of this made sense to you. Overall theme here is probably going to be really short-oriented this week. I know that hasn't always been the very best strategy, especially in this market. It's been a tougher way to go. But I think right now there's enough signs and there's enough things under the surface that lead us to think we're going to see something here. What magnitude? Well, hell, I don't know. We're just going to have to wait and see. But I do think that's the next move in this sequence of events, is a little bit of a pullback. So anyway, guys, thank you very much for watching Stock Market Mutterings. If you need my help, you know how to reach out to me down there in the description box. Also, check out that event I did with Sylvia Bellrock, Technical Talk. We would like to make this a permanent event, but we also need your support for that, and we're looking to grow together as a community and work together. So anyway, guys, thanks very much for watching this video. Take care, trade well. I'll talk to you soon.